Bitcoin economics. Bitcoin is a digital asset designed to work in peer-to-peer transactions as a currency. Bitcoins have three qualities useful in a currency, according to The Economist in January 2015. They are hard to earn, limited in supply and easy to verify. However, as of 2015, Bitcoin functions more as a payment processor than as a currency. Economists define money as a store of value, a medium of exchange, and a unit of account. According to The Economist in 2014, Bitcoin functions best as a medium of exchange. However, this is debated, and a 2018 assessment by The Economist found that cryptocurrencies met none of these three criteria. According to research by Cambridge University, between 2.9 million and 5.8 million unique users used a cryptocurrency wallet in 2017, most of them for Bitcoin. The number of users has grown significantly since 2013, when there were 300,000 to 1.3 million users. Acceptance by merchants. The overwhelming majority of Bitcoin transactions take place on a cryptocurrency exchange, rather than being used in transactions with merchants. Delays processing payments through the blockchain of about 10 minutes make Bitcoin use very difficult in a retail setting. Prices are not usually quoted in units of Bitcoin, and many trades involve one, or sometimes two, conversions into conventional currencies. Merchants that do accept Bitcoin payments may use payment service providers to perform the conversions. In 2017 and 2018, Bitcoin's acceptance among major online retailers included only 3 of the top 500 U.S. online merchants, down from 5 in 2016. Reasons for this decline include high transaction fees due to Bitcoin's scalability issues and long transaction times. Bloomberg reported that the largest 17 crypto merchant processing services handled $69 million in June 2018, down from $411 million in September 2017. Bitcoin is not actually usable for retail transactions because of high costs and the inability to process chargebacks, according to Nicholas Weaver, a researcher quoted by Bloomberg. High price volatility and transaction fees make paying for small retail purchases with Bitcoin impractical, according to economist Kim Grauer. However, Bitcoin continues to be used for large item purchases on sites such as Overstock.com, and for cross-border payments to freelancers and other vendors. Financial institutions. Bitcoins can be bought on digital currency exchanges. Bitcoin has not gained acceptance for use in international remittances despite high fees charged by banks and Western Union who compete in this market. Unlike Bitcoin, these competitors accept and dispense cash and do not require the use of the internet, which is a distinct advantage in lower-income countries. In 2014, the National Australia Bank closed accounts of businesses with ties to Bitcoin, and HSBC refused to serve a hedge fund with links to Bitcoin. Australian banks in general have been reported as closing down bank accounts of operators of businesses involving the currency. Plans were announced to include a Bitcoin futures option on the Chicago Mercantile Exchange in 2017. Trading in Bitcoin futures was announced to begin on December 10, 2017. As an investment, the Winklevoss twins have purchased Bitcoin. In 2013, the Washington Post reported a claim that they own 1% of all the Bitcoins in existence at the time. Other methods of investment are Bitcoin funds. The first regulated Bitcoin fund was established in Jersey in July 2014 and approved by the Jersey Financial Services Commission. In 2013 and 2014, the European Banking Authority and the Financial Industry Regulatory Authority, FINRA, a United States self-regulatory organization, warned that investing in Bitcoins carries significant risks. Forbes named Bitcoin the best investment of 2013. In 2014, Bloomberg named Bitcoin one of its worst investments of the year. In 2015, Bitcoin topped Bloomberg's currency tables. According to ByteInfoCharts.com, in 2017 there are 9,272 Bitcoin wallets with more than $1 million worth of Bitcoins. The exact number of Bitcoin millionaires is uncertain, as a single person can have more than one Bitcoin wallet. Venture capital. Venture capitalists, such as Peter Thiel's Founders Fund, which invested $3 million in BitPay, do not purchase Bitcoins themselves, but instead fund Bitcoin infrastructure that provides payment systems to merchants, exchanges, wallet services, etc. In 2012, an incubator for Bitcoin-focused startups was founded by Adam Draper, with financing help from his father, venture capitalist Tim Draper, one of the largest Bitcoin holders after winning an auction of 30,000 Bitcoins, at the time called Mystery Buyer. The company's goal is to fund 100 Bitcoin businesses within 2 to 3 years with $10,000 to $20,000 for a 6% stake. Investors also invest in Bitcoin mining. According to a 2015 study by Paolo Tasca, Bitcoin startups raised almost $1 billion in 3 years, Q1 2012, Q1 2015. Price and volatility. The price of Bitcoins has gone through cycles of appreciation and depreciation referred to by some as bubbles and busts. In 2011, the value of one Bitcoin rapidly rose from about 30 US cents to $32 before returning to $2. In the latter half of 2012 and during the 2012-13 Cypriot financial crisis, the Bitcoin price began to rise, reaching a high of $266 on April 10, 2013, before crashing to around $50. On November 29, 2013, the cost of one Bitcoin rose to a peak of $1,242. In 2014, the price fell sharply, and as of April remained depressed at little more than half 2013 prices. As of August 2014 it was under $600. During their time as Bitcoin developers, Gavin Andresen and Mike Hearn warned that bubbles may occur. According to Mark T. Williams, as of 2014, Bitcoin has volatility 7 times greater than gold, 8 times greater than the S&P 500, and 18 times greater than the US dollar.